Thanks for clicking! The London and St. Thomas Association of Realtors, LSTAR, has released London's real estate data for the month of August, showing a real estate market that is continuing to slow down.
That's our best time to strike.
Well, it doesn't look like that slowdown is going to be changing anytime soon, with even the London Free Press, our local paper, noting that interest rate cuts probably won't be bringing a boost to London's home prices.
Why didn't you bribe them?
In fact, as we'll see today, with London having the most active listings heading into the fall that it's had for the past decade, and with it also having the highest number of new listings that we've seen in August for the past 10 years, we could be seeing some signs of potential stress. So what I want to do today is go over London's real estate market for the month of August, take a look at the report coming from the London Free Press, and then discuss what to look for next. As we'll see today, London's real estate market is very much in the favor of the buyer, and it doesn't look like that's going to change anytime soon. We will continue to track the London market on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price. The benchmark price, that's the price of a home that represents the most popular set of features, and that was up marginally in August. The benchmark in July was sitting at $620,600, and that bumped about $3,000 to $623,500 in August. So the benchmark is up about $3,000 since last month, and still up about $16,000 since this point in time in 2023. With that said, the average price did fall in August. The average price was sitting at about $645,000 in July, and that fell about $16,000 to $629,000 in August. So the average price is down about $16,000 since last month, and still down about $14,000 since this point in time in 2023. And the median price was down, though by not nearly as much. The median price, if you'll remember, that's where half as many homes sell over that price and half as many sell under. The median price in July was $606,000, and that fell about $6,000 to $600,000. So the median price down about $6,000 from last month, but still up about $7,000 since August of 2023. And with these price drops, we are seeing a reduction in the sales to list price ratio, which measures by how much over or under asking the average home sells. So if a home is listed for 100 and sells for 95, the sales to list price ratio would be 95. London's SLPR in July was 98.5 and is now sitting at 98.1. So on average, homes are selling for 98.1% of their asking price.
The best salesman ever.
In the months of inventory measurement, the MOI has bumped up as well. The MOI, that's if no more homes came to the market, how long would it take for London to completely run out of homes for sale? The MOI in July was 4.5, and that bumped up to 4.7 in August. And that's actually the most months of inventory, the highest MOI that London has seen heading into the fall market for the past 10 years. Meaning there's a lot of selection out there and not, as we'll see, a whole lot of demand. That means a lot more power for the home buyer, which means, as always, finance conditions, home inspections, etc. If your realtor tells you you can't have a finance condition, if your realtor lacks the skill to negotiate and protect your financial interests, get a better realtor.
Oh, that me off. That me right off.
So, in summary, London's benchmark price up about $2,900, average price down about $16,000, the median price down about $6,000. We have relative more inventory sitting on the market, and homes are selling for even more under asking. But while prices do at least appear to be holding, it's not clear how long that can last, given the lack of sales and a flood of new inventory coming to the market. Sales in London in August came in at 385, the lowest number of sales that London's seen in August for the past 10 years. Meanwhile, new listings continued to flood in, coming in at 903, again, the highest number of new listings coming to the market in August in London for the past decade. In fact, that's actually quite a bit more new listings coming to the market, 18% higher than the 10-year average for new listings in August, or 17% higher if we take out the COVID bubble years of 2020 and 21 and the crash in 2022.
No, it did not.
Well, the average price dropped $200,000 and continues to be about $200,000 less than peak, so what would you call it?
It's completely normal.
Regardless, new listings coming in that much higher than the 10-year average is definitely somewhat of a new development. Although we did see a rise in new listings above the average in July, we didn't see it in June, May, April, March, or February. So that is quite a bit of new listings coming to the market, well above the 10-year average, well above what we should be seeing in August, coming at a time when there's already a lot of listings on the market. As such, we could be seeing some early signs of stress, though it is obviously too early to tell. But with all of the new listings and the lack of sales, London now has an awful lot of active listings just sitting on the market, coming in at 1803, again, the highest number of available inventory sitting on London's market that we've seen for the past 10 years. So, a flood of new inventory hitting the market, not many sales to speak of, as we saw 4.7 months worth of inventory sitting on the market. Buyers have a lot of negotiating power, which is also showing up in the sales to new listing ratio, the SNLR, where anything below 40 is indicative of a market firmly in the hands of the buyer. London's SNLR came in at 42.6 in August, again, far below where it's been over the past decade. Taken all together, the lack of sales, the number of listings coming to the market, the number of listings sitting on the market, the months of inventory measurement, and the SNLR, London's real estate market is currently very much in the favor of the home buyer. And with all of this inventory sitting on the market, all of this inventory coming to the market, even some of the usual suspects are starting to admit that prices aren't going up anytime soon, with a London realtor noting in the Free Press that London has enough supply of homes to absorb any jump in demand in the short term without impacting prices too much. And when even a realtor admits that prices aren't going up anytime soon, that's a good chance the prices are not going up anytime soon. Remember, these are the same guys, though not this realtor specifically, that said prices were going to continue to rise even when the Bank of Canada increased rates in 2022. With that said, a leopard doesn't change its spots, and that same realtor also noted that we have a perfectly really balanced market right now, which no, it's not. If anything, it's heavily in the favor of the buyer, and that the market's really good for sellers, which no, it's not. Homes are selling for under asking, sitting for an average of 24 days on the market, when they were selling within 8 days only a few years prior.
That's amazing.
It's not amazing at all.
But that does raise an interesting point. As we discussed earlier, there are a lot more homes coming to the market than we would expect. 17% more than we would be expecting in a normal August. And, all things being equal, there really shouldn't be, as we've seen article after article noting that the Bank of Canada is going to be continually cutting rates going forward. As such, it would make a lot more sense for those would-be sellers to wait on selling their homes, wait for those interest rate cuts to come, which is expected to add a lot of additional buying power to would-be buyers. But sellers, at least for the past 2 months, are not waiting. So, either we're A, seeing some signs of stress in the market with sellers needing to sell their home or wanting to sell their home before that mortgage renewal wave hits, or B, sellers are not of the belief that home prices are going to go up that much more come the spring market in 2025.
Being naive and stupid.
Now, as to why we're seeing all of these new listings come to the market, that remains to be seen. But I do agree with what was said in the Free Press with all of those listings sitting on the market, all of these active listings. We shouldn't expect to see major price increases at least over the next few months. If anything, I would expect to see price decreases going forward, especially if we don't start to see would-be homebuyers coming back to the table. With that said, what happens in the London market over the next few months remains to be seen, especially with unemployment rising, but we will obviously continue to track that market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.